Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of New York and London coffee markets.
New York coffee. Prices since the high in early February at $429.95 had been making lower highs and lower lows, and thus sowing some initial low-level bearish doubts, especially when prices strayed below the 50% Fibonacci line at 402.5. All these actions allowed me 6 weeks ago to draw my first bearish Andrews pitchfork of any sort for some time, for quite a while indeed, and it was for the early February to early March move. However, this first pitchfork did not work, and I finessed it into what is now on my daily chart, a shallower, dark blue bearish shift pitchfork. And this looked good for a while. However, prices breached but did not stabilize below the dark blue lower time, and that's currently at 335.5, as well as below the medium moving average, which is currently at 360.80. Instead, prices turned higher, pushing up over the medium moving average, filling the gap left over in early April, over the dark blue middle time, currently at 363 even, the flatlining short medium moving average, currently at 383.35, the dark blue upper time, currently at 390.5, and finally piercing, though not as yet closing over the old 50% projected Fibonacci line at 402.05. This all also offset the idea of any downside to the large late January to early April island top pattern, and I've today retired any targets below for this pattern, despite the primary target at 320.85 almost being reached 3 weeks ago. This was actually something I threatened to do last time. What I have drawn since, though not highlighted as yet, are a late October 2024 to April 25 bullish Andrews and bullish shift pitchforks. Now, I don't like doing both of these at the same time, but I'm not sure which one will become the more dominant, though an early guess would seem the bullish shift pitchfork, as the market is also playing with the middle time of this, currently at 401.5 right now. Okay, so there's something else to look at here, and for this I'm indebted to Ray Bradbury for asking me about New York coffee 10 weeks ago, and I went at that time to my longer term charts, the monthly charts, where we can see some possible insights. You see, on the monthly longer term charts, I noticed a pattern that had not been immediately obvious to me at the start of 2025 when I last reviewed the longer term charts. It is a multi-year 2012 to 2024 very large reverse head and shoulders bottom for bright red neckline on my daily chart, currently at 274.10. The break higher over this neckline has already reached its primary target, but it is still open, if only just, the secondary much harder to reach target X, up in the 433.35 area. What is interesting about this is that nearby to target X is the next 100% projected Fibonacci line here at 433.75, quite close in the scheme of things. So what does this mean? Does this mean the market will turn at those levels? Up to now, I could not say, not yet, though we did have a monthly shooting star pattern, usually seen as a bearish pattern in February, and an indecisive doji cross for long tongue topside on top of it in March. And I'm now wondering right now, with the actions this month of prices pushing back down below the dark blue upper time, which is currently at 373.65, and by a considerable distance, and then now turning back up again, whether we really have topped out. I have said here for weeks now that, and I quote, if there ever was an area where the market could hesitate on the top side, then this 433.35 to 433.75 area would be a reasonable choice, end of quote. I also added to watch that area and any approach to that area very closely. It may be that February's shooting star pattern may have been the final move in the attempts higher, managing to reach just under target X. However, the recovery higher from such lows as seen in April to now distinctly start challenging the top side, especially at the end of this month, is making me reappraise the top side and target X once more. London coffee. 19 weeks ago, I drew a new large pattern that even now encompasses all the recent significant elements. It is not ideal and it's quite large, but it is still there. It is the bright red, shallow, large bull channel, currently at 4800 to 6080. Within this pattern sat other patterns. Most have been retired, but some have not. We also have a dark blue early May 24 to date uptrend, currently at 4664, that sits just outside and below this pattern. And an old bright green early December 24 to early April 25 uptrend that was broken 5 weeks ago on the downside. And together with the purple mid-February to date downtrend, currently also at 5435, formed a sideways triangle between mid-February until early April, when we had the break lower out of this pattern. Prices reached both its primary and secondary targets below for this pattern. We also had another pattern I spotted and asked to be considered 10 weeks ago, a late January to late February Adam and Eve double top pattern. The primary target was reached 9 weeks ago, and the secondary hard to reach target was achieved 4 weeks ago, whilst pushing down through the 4800 level and even the bright red lower bull channel line. There was still no closes below that this bull channel line. Indeed, it acted as support 2 weeks ago, breached but not broken, before later that week gapping higher and back up towards and eventually over the mauve medium moving average. I had indeed pointed out 3 weeks ago that, and I quote, apart from the bright red lower bull channel line, we really don't have that much until we reach the 50% Fibonacci line, with the May 24 to February 25 move at 45.52, which ties in with the early December lows at 45.40 and 45.07, but doesn't look that strong. However, we have a wide congestion zone further down, starting at the April 24 high at 43.38, down to the lesser Fibonacci line at 40.95, end of quote. Well, prices took fright at being below the bright red lower bull channel line, and on approach to the 50% Fibonacci line below, also at 45.52 of the May 24 to February 25 move, such that they shot higher 3 weeks ago, gapping higher on the way twice. But, and it is an important but they now have the overhang of the market from roughly 5,300 up to this year's high at 58.49, sitting above. And now that we're up here, I've been wondering whether, as I said 2 weeks ago, and I quote, whatever rally we have, whether it will soon start to peter out. Don't get me wrong, we have a strong reactionary move back up within a good-looking bright red bull channel, but we also have some nearby overhead resistances that may come into play on any attempt higher over 5,300. End of quote. Those resistances have now started to come into play, based around the mauve medium moving average, currently at 53.15, the green short medium moving average, currently at 54.25, the purple mid-February to date downtrend, currently at 54.35, and the new trend line, the pink neckline extension to the small but acute reverse head and shoulders pattern, currently at 54.04. This has potential to be a strong bullish move higher. However, at the moment, it is looking like a possible reverse head and shoulders continuation pattern. I would pay special attention to this pattern and the very nearby overhead resistances, as this could all be coming to a cusp and coming quite soon.
Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.